Pharmaceuticals, clearly, since yesterday at least, you're seeing some heightened trading activity built in the pharmaceutical space. So let's try and understand all the dynamics that are playing out for the sector right now, and who better than Pankaj Poddar, our research analyst, here to highlight exactly that. Pankaj?
Aisha, the big theme in the pharma space has been, of course, what's happening with the US markets, how are the numbers looking in, what's happening with the US pricing pressure. But in the midst of that, you're getting one space, which is China. And, will that be the big market for the Indian space? Now, they have been slightly friendly in considering, they have said publicly that they would be looking at swift regulatory nods to Indian companies for certain 28 therapies. They have already reduced drug. Majority of it comes in the oncology space. So imports from India could rise to China. China itself is just about 1% as far as the entire space entire exports of India is concerned. So the room to grow over there is particularly quite high. 28 drugs have already been exempted, mainly from the pain management as well as the oncology or the cancer space as it's called. So that's what essentially you're looking at this point of time. But talks have been continuously on, and talks are that there would be more relief which would come in, which means that Indian companies can make more inroad over there. Earlier, the import duty was close to 5 to 6%, but now it has been made zero for the above drugs that we just discussed. Just to put things into perspective, for India, pharma is probably one of the biggest export theme. After software, it's one of the largest that you're saying about, and within that, China is pretty minuscule. It's less than about 1% or so. It's pretty high growing. In last year, it grew by about 38-40% plus. But can that growth be sustained or not? That's the key question. Can it become as big market as US? Probably not. But can it become as big as Europe? Europe is about 15% of India's exports. Could that, be something which could be the next trigger for these Indian pharma space? That's the big talking point in the market about pharma space. Some of the ones that are focusing in on oncology are trying to go ahead and make some inroads in the Chinese markets.
All right, Pankaj. Thanks very much for putting things in perspective. In fact, perhaps, let's get into that discussion with Mr. Dinesh Dua, Dr. Dinesh Dua, rather, Chairman, Pharmaceuticals Export Promotion Council of India. Dr. Dua, it's great to have you on the show. Thanks very much for taking out the time. Like Pankaj laid out, how big is the market in China for Indian firms to export? It's really about drawing a comparison on the kind of presence they have in the US and whether they can actually simulate that in China.
Good morning. Thanks for getting me on the channel. It's such a pleasure that we're talking about this sector which is currently buzzing. And as you rightly pointed out, where else would you be buzzing more than US, and that's China. See, China currently is valued in terms of market at about $128 billion, growing at about 10% year on year. The growth has, albeit slowed down a little because of a variety of reasons which we can discuss. But after US, which out of $1.4 trillion worth of global pharmaceutical market, is the second largest single pharmaceutical market after $475 billion of US. It is about $128 billion and growing very rapidly like India.
Dr. Dua, thanks very much for waiting by. You're making the point of Indian pharma trying to find ground in China, and you were highlighting the scope and scale of the business likely taking off in that region. How soon can that happen? I mean, how much of a demand would there be for Indian products in the Chinese market?
I'm very cautiously optimistic. The first good thing which Pankaj stated earlier was about oncology, 28 molecules having no customs duty. So that's a very good sign and a good omen. And you would recall all of this started because of a movie of a patient, real life movie of a patient who was suffering from blood cancer. And the cost of medication by an Indian generic product vis-a-vis the innovator came down so dramatically that it overnight became very affordable. So therefore, there is definitely a realization both in the government, the agencies, the regulatory agencies, as well as Chamber of Commerce, and of course the general public per se, because of this movie, that Indian generics are not only excellent quality, but they present a value for money in terms of being very economical, being quality conscious, and particularly so, it augurs very well for the units which are approved by European Union, US FDA, Japan, Korea, South Africa, UK MHRA, and so on and so forth. So in my considered opinion, from the Fomexel standpoint, we from Ministry of Commerce, Government of India, are very cautiously optimistic in terms of breaking through the market. Let's be clear. From an earlier standpoint, where indirect entry barriers were there, where any industrial drug license, that's like a passport to get into the market, would put you down by anything between 5 to 7 years with huge investments and still no answer. I mean, you could easily be rejected. And like US FDA and Europe, where you have a definitive timeline and you're sure when you could enter the market, as of today, what the sound bites that I get is that we could be in there within about 2 to 3 years or thereabouts. And in case you are a US FDA approved plant or a European Union approved plant, it could be as little as 1 to 1.5 years. So I look at it from a very, very big sense of optimism. Let's see how it kind of shapes up as we go along.
Well, but US is the main focus for Indian companies as of now. Can China replicate the slowdown of the growth?
Not really, not in the next foreseeable 3 to 4 years, but I'm reasonably confident from Indian pharmaceutical perspective that it's an excellent market. The domestic prices are substantially and significantly 3 to 7x higher than the export pricing, particularly in the formulation space. And give it another 3 or 4 years, and I think this could be even a bigger opportunity in terms of volumes, because the volumes are very, very high as compared to US. In terms of value, as we go along, as both the economies of China and India are growing rapidly, anything between 7 to 8%, you would see that in 5 years, time, space and landscape, the market will definitely grow very significantly, but it's still far away from the overall size of the generics worldwide. US currently is valued at about $150 billion or thereabouts. China is $128 billion, but that comprises of a variety of things like innovation, pharma, patented pharma, and generic. Generic space is about 51% of the overall business, so it's significantly lower in terms of value, but very, very close to US in terms of volume.
Approvals and regulation when it comes to China, is it a very tough market to enter into for Indian companies?
Absolutely, you said it. We know that most of us in the large pharma who had the wherewithal and who had deep pockets to invest into China got in there, but very soon recoiled back because one, the policies were opaque. Two, we distinctly got a feeling that there was complete opaqueness in terms of understanding the rules and regulations. And even if we understood to some extent, on the ground reality was entirely different from what was really written. However, having said that, what is important today is that as we speak now, a delegation of Ministry of Commerce led by the Joint Secretary, Mr. Shamal Mishra, who's a part of Phomexel and our Phomexel team, is meeting up with CFDA, Chinese FDA, as well as Chinese Chamber of Commerce to iron out, this opaqueness, as well as with the backdrop of a recent taking off of the customs duties. I think it is pretty exciting as of today. But once again, I would say with cautious optimism, we look at the rest of 8 or 9 therapy areas, which includes antibiotics, pain management, cardiovascular, urinogenital, abdominal, and gastrointestinal and stuff like that. Rare diseases, that's one area where India has done exceedingly well. And also, what should be very attractive to India on a fast track mode would be the fact that we are global leaders in generic space for specialty generics, not vanilla generics, but specialty generics, new drug delivery systems, NDDS as we call it, and which is like 505(b)(2) in the US. I mean, that's a space where you could really redefine things. Biosimilars is another space where we could do very well. CRO, clinical research organizations, is a completely vacant space where the Chinese companies lack the wherewithal, the length and the breadth, a deep breadth that Indians have, having qualified for US and Europe. And these are areas you could do exceedingly well in China in the next 2 years or thereabouts.
And it's very interesting because China is where the world is going. So I think that opportunity window opening up for Indian pharma also expands their scope of growth. Thanks very much, Dr. Dua, for joining us. Interesting insights that you shared with us with regards to this opportunity.